Welcome, traders, to another Tickmill trading update with me, Patrick Mullally. Want to take a look at the SP 500 using the emini futures contract and put together some high probability action areas where we can look to engage the market and then identify some realistic price objectives. Before we jump into the technicals, as always, want to keep abreast of the market narrative and market dynamics. So we finished down last week 1.5%, which takes us down 6.3% for the month and down 5.1% for the year. The 11 sectors from a standpoint perspective, technology, consumer discretionary are down on the year. And unfortunately, it weighed the S&P as these two sectors represent 42.7% of the weight from a sectoral perspective. 9 sectors are outperforming while those two weighed down on the index. Market breadth is still pretty shaky, with 37% of the S&P 500 components trading above their 20-day moving average, 33% only above the 50-day moving average, and 39% over the 200 days. So that's not a great look in terms of market breadth. If we think about the macro slate heading into this week, we have Chicago PMIs out today, Monday. We then get ISM manufacturing, PMI, and JOLTS data on Tuesday. Wednesday, ADP, employment change, factory orders, and the much lauded Liberation Day with respect to Trump's tariff announcements. We have had some of that narrative feeding through over the weekend, which has led to a pretty weak open this morning. Thursday, we'll get the balance of trade, then jobless claims, ISM services PMI, and then heading into Friday, it's going to be a bumper end to the week as we're going to get the non-farm payrolls data, and we are also going to hear from Fed Chair Powell. So there's quite a bit to chew through this week and quite a bit of uncertainty as we open up the week, and that is likely to remain in play throughout this week. Once we get through the Liberation Day, then the focus is going to clearly shift to the back end of the week with Powell and the jobs data. In terms of dealer positioning, the Friday close left us with 1.2 billion in short gamma, with a gamma flip point where the market turns from negative to positive gamma at 57.69. So keep that level in mind as we go through the week. The VIX obviously remains elevated, trading this morning at 24.13. So in that environment, certainly it warrants a probably sizing down trades and giving yourself a bit more breathing room in terms of stops. Currently, I'm using a 25-point stop for positions, for initiating positions, and that risk is 1.25%. In terms of the seasonality, we are actually in a period where we could see some tailwinds from seasonality, likely to be a little bit choppy as we head through month end and then into the early part of April. But you can see here that that the seasonals are supportive pretty much then into May. You can see my current positions. I'm currently short the market. Have entries from 58.33 and 57.72. I'm going to adjust stops accordingly throughout today. The key for me as we head into this week is the bull bear zone that I'm using for the week is going to be this 55.50 to 55.60. If we get through there on the downside, then the next stop is going to be 54.58. Now, 54.58 is the implied move based on the options market for the week ahead. The implied move to the upside is 57.46. Keep that in mind as resistance. And technically for me, whilst we trade below the pivot here at 58.44, our target on the downside now from a technical perspective moves to 51.86. And you can see here on the weekly chart that coincides with the lows that we saw into the back end of this year. So those are levels to be cognizant of as we go into the week ahead. In terms of the intraday trading time frame, I would look at any move now back into the 5650s, be watching for bearish reversal patterns there to engage on the long side with that downside objective at the 54.58. Now, if we test the 54.58 coming into Wednesday and the tariff announcements, and we see buyers step in there, we could witness, or we could be potentially setting up for a sell the rumor, buy the news type trade. So this is going to be a key area, this 54.50s. It's also the weekly S2. So any move that takes us down into there, into Wednesday, I think that's an area where we could think about a bounce occurring. And then we'd be targeting a move up into the projected trend channel resistance, 5620s, this high volume area on the hourly profile. But like I say, the key level for me at the moment is this 5650s. And whilst we're below there, then the risk is to the downside for further downsides. But you will see here, if we just think about it in broad terms from an Elliott wave perspective, that this move could then complete an initial 5-wave sequence from the highs, and like I say, we could expect a bounce from that 54.50s. But to think that is the end to the downside is probably a little bit premature at this stage, as I think sellers will step back in at more favourable levels. And like I say, that 56.50 is pivotal on the upside. If you want to follow my work on a daily basis, I post through the Tickmill blog with a daily trading plan. This is the weekly introduction, and you can also join me through the trader chat that I run through Facebook, where I share my P&L trades, etc., and institutional research, which gives you a good perspective on what the bigger boys are doing in the markets. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.